G'day guys and welcome to a market recap video. Now before I get underway with the video, if you could, hit the like button and leave a comment down below. Let me know how you went last week. For me, GJ Gold, for the most part, they were range bound throughout the week. So it meant while I was on the charts and on stream, limited opportunities. Took two trades, both were identical types of entries, one on GJ and one on Gold. So what I thought I'd do in this video is just recap the entry I took on GJ, why I took the entry, what gave me the validations to take the entry, and how I went about managing the trade. So without further ado guys, here is trade taken at London Open on Wednesday. Now what we have here is GJ was approaching, was at a resistance, 4-hour resistance level I'd predetermined. I marked on the chart prior to the stream as a level where price was obviously on the 4-hour time frame was level of resistance. Price was at that level prior to, so the pre-London candle was actually a strong bullish candle, closed right up in that resistance, which usually, look, if you to ask me, would that usually put me off taking a sell entry? Well, in most cases, yes. However, the difference here is price was at a strong level of resistance, which we have rejected multiple times. You could say once, you could almost say twice here. Again here, 3, 4, 5, and in anticipation that it may do the exact same on the 6th occasion. Now, doesn't mean I just sell it as this count closes. What I want to see and what gave me the validation to take the entry, and this is something I back tested guys during the Christmas break and over New Year, and the success rate in this entry was about 92% roughly from what I back tested. Now what we want to see is, so we're at, first of all, price is at 4-hour resistance, London Open, high time volume. What happened was this candle popped straight up. You don't want it to create a lower wick first. It popped straight up. So when it got broke the high or tapped into the high of that previous candle, what I simply did was set a market execution sell. Stop loss above the range high, the highest point, was about 18-19 pips, in anticipation through the back testing that if price was to pop straight up at this 4-hour resistance without creating its lower wick, there's about 90% probability that at some point it's going to pull back down to create its lower wick. By that point there, you can usually get to break even or even begin to secure, just depends on the margin. So in this case, it was about 6 pips where the upper wick that it created. Not enough to really secure. Got to break even around 6.5, 7. And as soon as it started to pop back below into the range below, started to secure. Had it, to be honest, I accidentally closed the full thing around 11.5 pips by mistake instead of closing partials. Pressed the wrong button. My bad. So why I took the trade, and again, because what I've seen when price is at that 4-hour resistance at a high time of volume, usually a session open or the pre-session open candle perhaps, or maybe the candle after it. The only other time I probably consider using it is at the open of a new 4-hour candle, because a lot of time that will do the same thing where it'll just pop up one direction, out creating a wick first in the opposite direction, and then eventually comes back down to create a wick in the opposite direction. So took it in anticipation that that's what was going to happen. So where I entered, and from the back testing, what usually the entry point for me is the high of the previous candle. As soon as the price taps into the high of the previous candle, I just set market execute sell. Again, stop loss above the range high, get to break even, usually around the time it flips back bearish. Reason why I say that is because what it could do is pull back down. There's a lot of volume at that time, obviously high volatility time, session open. It would just pull back to create a smaller wick and then pop back up to break its own high. I don't want to get caught out in that, because with the volume and the time of day, if it was to do so, then it's likely just to rip to the upside. So that would look something like so. Just quickly draw it in for you. So let's just say it's, for instance, it's popped up. Oh, do that again. Bear with, guys. Let's just say this is open and pops up. And then all of a sudden, so this is the exact same candle that I'm entering here. Pulls back down, flips, briefly bearish. I don't want it to start pulling back up. That's why at that point there, I would get to break even as soon as it starts to flip, because if it does pull back up, then what it's likely going to do is just create a small lower wick to grab a little bit more liquidity. Previous candle was a strong bullish candle. It's likely going to rip to the upside. So that is why I get to break even once it flips. Now, what will give me the validations to take Sentry? Just now recap as to when and why I would take it. So, first of all, what you need to determine is price is at a resistance, preferably a 4-hour resistance. It can be a 30-minute resistance. The only time I'd use it, a 30-minute resistance, is, for instance, I'll draw it here. This blue is a 30-minute level, so support or resistance, I should say. And let's just say this is the daily low. We've done this, the pre-London open candles. This is now the daily low. And this is the 30-minute support to the left. Now let's just say at the open, which is the same thing, we pop straight down, like so. Maybe even wick into the range below, pop straight down. What I would probably do at that point there is maybe place a buy market order buy just at the low of the zone, what I previously would have had marked into the left. If it does begin to break that level in anticipation, same thing, and it's eventually going to pull back up, creates upper wick, like so. But again, the better confirmation is to simply trade it at the 4-hour level. So this is only this example if it's the daily low or daily high, the 30-minute resistance, support resistance. But preferably what you want to see is for it to happen on the 4-hour. A lot of the time, the daily high low would be out of 4-hour zone either way, you'll find. So first thing you want to see is time and volume, really. Time has to be time and volume. So that's step one. Round again, either 30 minutes prior to session, maybe the pre-session candle, session open candle preferable, or even maybe the 30-minute candle after. Otherwise, open up a new 4-hour candle. You'll often see it do likewise. Secondly, needs to be at a 4-hour resistance or at a 4-hour support. That's what we want. Again, when we can use the 30, but preferably the 4-hour. Now, third, so price has to have tapped into it on the previous candle. It doesn't actually have to close at it. So if it closed a little bit below, for instance, like so. So if it closes, just say like this, but it's tapped in. We want to see it tap in. Then the new candle, again, no lower wick, just pop straight up. You could even place your order a little bit higher up, but again, your trigger could be the high of the previous candle. Places you just market execute sell. So that is also valid. So 2, you want it to be at a level of support or resistance on the 4-hour. Now 3, price, when it opens up, has to continue in line with the approach. So if we're looking for sells, you're taking a sell with but the catalyst needs to be, the candle has to pop straight up to create upper wick. No lower wick. Not even if it pulls down and creates a small lower wick, like so, maybe a pip and a half, 2 pips. It's not valid in my opinion from my back testing. You want it to pop straight up like so, setting your order as soon as it taps in a high, or if there's a candle slightly to the left or a little bit higher up, you can use that. Stop loss above the range high, and you're starting to get to break even, and sometimes even securing as soon as it flips. So that's how you validate it. So time and volume, 4-hour support resistance, candle for a sell has to pop straight up without creating a low wick. If it's at a 4-hour support, it has to pop straight down without creating an upper wick. And then as soon as it begins to flip, you're getting to break even, considering securing, and the rest is history. In this particular case, like I said, about a minute and a half TP1. So that's just a recap, guys. I want to go over it. It's a entry type that, I mean, only give you options if it's at the right level, 4-hour support resistance at the right time. But through the back testing, it is highly effective. So just maybe if you have the time, do some back testing yourself and see what the results are for you. Once again, guys, if you can, hit the like button, leave a comment, let me know what you thought of the video. And moving forward, live streams will be back from Tuesday, obviously, with Easter Monday won't be on tomorrow. I look forward to seeing you on the live stream. And yeah, cheers, guys. Stay safe. Bye for now.